You wouldn't believe what Elon Musk just tweeted a couple of days ago. He tweeted that SBF was bad at League. It's a video game, in case some of you that don't know. And he also agreed that he should be in jail. Let's give him an adult timeout in the big house and move on. And I kind of agree with that. He should be thrown in jail for all the things he's done and all the damage he's caused to a lot of people around the world. So CVS is looking to become more of the leading healthcare provider around the world. But all it's missing is doctors. Yes, it does have pharmacists, but it also needs doctors that specialize in other areas. I like how everyone keeps bringing up stock market rallies on recession fears. Currently, the market's red, so how are we rallying? Also, Tesla plunges on China's news. And here's my take on what's going to happen. We're going to see a slow demand decrease because we're seeing competition increase for Tesla. We're seeing people out there not trying to spend money on cars right now because there's a lot of uncertainty, as you can see: recession fears, depression fears, inflation, interest rates, mortgage rates falling, all this other stuff that's going on. So I don't think people are looking to buy cars right now. And if they are, they might have a nice job, they might have a nice business or something going for them, and they just need the car for work or their business. So these are my concerns with Tesla right now and the stock. Is the demand fears, the competition is coming. And we're also seeing people getting laid off. As you can see on the bottom, jobless claims rise. PPI a little high. As a lot of companies are laying people off, as they're trying to budget more for the unknown. What's going to happen next? What's going to happen to demand? How are they going to increase the revenue? How are they going to generate more cash flow? We could see cell tower rates climb about 20%, and here's 3 to consider buying. Now, this is financial advice. This is just what the article is considering. American Tower, AMT, Crown Castle, CCI, CBA, Communications. Now, it's funny how the Fed is targeting 2% inflation. Now, I think that's going to take a while, if it's even possible. In order for that to happen, they need to push unemployment to 6.7% to restore 2% inflation. But getting the most out of the way to a 3% inflation rate could be done with much more smaller rise to 4.6% unemployment. And that will be sacrificing about 1.7 million jobs. Now, the Fed is scheduled to have a meeting on December 15th, where we can expect 50 basis points increase on the interest rates. So we'll see what happens to the stock market, or how much they increase, and how many basis points it's going to be on December 15th. So stay tuned, mark that on your calendars, and see what happens. Now, here's a few ways that you can prepare for the recession if it's going to happen, or even a depression. The first thing you want to do is stay away from growth stocks. If you think growth stocks will come back alive again, you're a little bit over your head and need to consider reality. Because growth stocks are going to take a time. It takes time for companies to grow. You're not going to see the growth overnight. No company has grown overnight and became a giant. Every company out there, it took a while. Keep your eyes on the energy sector. It's been outperforming and performing really good this year, given where oil prices are right now. And also, dismiss the idea that the world is permanently moving away from fossil fuels. And as you can see, Europe has forced into an energy restructure as functions weaning themselves off Russian gas. The second thing you want to keep in mind is the thought that banks underperform during recessions. Also keep in mind, it's that time of the season. Tax loss selling dates on your calendar should be marked. In December 2022, you could see people selling off their stocks and taking a loss selling because for tax purposes. Around this time of the year, a lot of people sell in order to take hits and in order for their losses to show up on their taxes. So in the end, many people pay less in taxes. And usually around November and December, that's the most attractive times for securities for taking loss selling on their investments. So keep that in mind. So also keep in mind consumers are taking on more debt. As of October, 1.17 trillion outstanding credit. But overall, consumers remain in good financial shape, according to Bank of America. And apparently, U.S. wages are growing. But U.S. wage growth is evaluated, but trending down. So it's not growing fast enough, and I don't think it will, with a lot of all the stuff that's going on. It's going to take time. So you can see service price inflation is easing, down 70%. So putting all that together, all this means is the market is going to continue to get beaten down and the risk of the economy sinks into recession and will intensify.